and welcome to Market Talk with your weekly deep dive into halal investing via race meets finance. We are on a mission to halalify the investment world, one stock at a time, inshallah. Let's explore the market through a halal lens, uncovering opportunities that align values and your future. Today's topic is Saudi Arabia opening its financial markets to foreign investors, a major structural reform that takes effect on February 1st, 2026, when Saudi Arabia will allow all foreign investors, institutional and individual, to invest directly in its capital markets without the previous qualification requirements. This move is the part of the kingdom's broader Vision 2030 strategy to diversify the economy, deepen liquidity, and integrate more fully with global capital markets. Before we begin, I would like to briefly mention the Musaffa Academy article titled Saudi Arabia Opens Its Door to Foreign Investors, which explains what changed, abolishing the qualified foreign investor framework, and what this means specifically for global investors. And now I'm really honored to introduce our today's guest, Brother Shakhshakan Bakhtiar, our investor relations lead our company, who is expert at this field. So please, brother,
Yeah, Assalamu
speak
alaikum.
about
Thank you for
our.
having.
Mhm.
Uh, of course, yes, thank you. Assalamu alaikum to everyone watching and to you as well, Sister Deora Khan. Thank you for having me. And yeah, excited to talk about what happened. It's a huge piece of news. I'm sure everybody saw it online as well. And it's important for our community as well, because since we're all Muslim investors, it's a Muslim country with one of the biggest equity markets in the Middle East, the biggest actually in the Middle East. So I'm sure everybody has questions and would love to keep updated on the situation, inshallah.
Yes, of course. If you have any question, you can ask in the comments. We are more than happy to answer your questions while discussing our today's topic. So, Brother Shakhshakan, we are today going to the topic with 5 subcategories. And let me introduce you first category, which we're going to start. It's about the core policy and market context. Before learning what's happening with the Saudi Arabia, first I think we have to know what it consists in the Saudi Arabian stock market. And let me ask my first question from you. Okay?
Sounds good.
Okay. My first question is, what exactly changed in Saudi Arabia's market access rules, and why is this considered a structural milestone?
Okay, so that's a great question. So the way Saudi Arabia's stock exchange worked is, first of all, it's called tadawul. We'll probably be using that term as we move on, so it's important for the viewers to know. Same way, the New York Stock Exchange, you'll probably see NYSE. For the Saudi exchange, usually people just call it tadawul. So structurally, the way tadawul was structured was the Saudi Capital Markets Authority had some restrictions in how foreign investors could get involved and to what degree. So it was not easy for people to invest in the Saudi stock market until, inshallah, coming on February 1st with some rules. So unless you met certain criteria, which included having $500 million in assets under management, roughly, you couldn't invest. So for a common investor like you and me who doesn't have $500 million in assets under management, we couldn't go and invest in the Saudi stock market under typical circumstances. And they refer to this as a qualified foreign investor term. So you would have to meet those criteria, have those assets in order to invest. So the recent change is basically that the Saudi authority, the Capital Markets Authority, has announced that they've abolished this concept of qualified foreign investors. So you don't need $500 million. Anyone can just come in and invest in the Saudi market, even if they don't have that kind of money. So that's a huge structural change that happened. There was a high barrier to entry, and that barrier doesn't exist anymore. So that's why it's a huge structural milestone for Saudi Arabia.
Wow, this really sounds exciting as you explain how it can apply for normal investors like you and me. For example, personally, I'm also really excited as you explain the topic deeper. So, yeah,
Um,
now let me ask our today's second question regarding our topic. Okay?
Sounds good.
Mm-hmm. Okay, my second question is that what was the purpose of the old QFI framework and how did its removal simplify foreign access?
Great question. So the way, like I said, as Saudi Arabia was developing economically and then financially, it set up a stock exchange and was growing. A concern that they had, and they still do have to some degree, is they prefer to keep, especially initially, they wanted to prevent a lot of their assets being bought by people abroad, and they wanted to prevent a lot of injection of hot money, so speculative money that's just coming and trading rather than money that comes in and genuinely invests and wants to see the company and the economy grow. So their strategy has been, according to the Capital Markets Authority, is to slowly reduce those barriers to entry. So slowly, as the market develops, as Saudi Arabia's economy develops, to make it easier and easier for other investors to enter as well. So they've started with a very high threshold, like you need $500 million in assets. You need to meet these strict criteria in order to invest. But now that the market's a bit more developed, the big players are already in there. There's higher corporate governance standards than in the past. Now they feel comfortable saying, okay, we can lower the threshold more, let other people come in as well. So it reflects sort of Saudi Arabia's own confidence in how its market has matured. And so, that's why the restriction was there in the first place, is that I feel like they felt they hadn't matured as much. And they had enough capital within Saudi Arabia that they didn't really need foreign capital at that stage. But as I'm sure we'll discuss shortly, they need more capital. They want to open to foreign capital. And that's another reason that they're making it easier to invest.
This sounds really cool. So they are shifting their strategy a little bit, and this is a sign that their market is getting more mature. This sounds really interesting. And then my next question will probably be, why did Saudi authorities choose now to fully open the market? Why literally now? Not earlier or not later?
Great question. And there's a couple of things. So, like we just discussed, part of it is they wanted their market to mature more, I think. But at the same time, it's not a huge difference only in terms of maturity if they did it 6 months ago or 6 months in the future. And I think a reason they did it now rather than at another time is twofold. One is actually it's one thing, but two faces. One is basically, I'm sure people have seen online Vision 2030, which is this huge Saudi development project to expand the economy, to invest in infrastructure, and to sort of diversify away from just oil based revenues, which, of course, everyone knows Saudi Arabia is one of the top producers of oil. It's their major revenue stream. They're the top player in the oil market globally. And Saudi Arabia wants to diversify away from that, especially as the world, nowadays is becoming so, the geopolitical risk is going high, and it affects oil and petrochemicals very strongly compared to other markets. So Saudi Arabia has been looking to diversify. And to diversify, it needs to make these investments. It needs to invest in infrastructure. It needs more capital to be injected into Saudi companies. And so
Mhm.
that's the number one reason they're opening the markets, is that they want more capital. They need more investors to come in, invest in Saudi Arabia, invest in Saudi companies, so that those companies can then invest in and help develop the infrastructure that Saudi Arabia needs to develop, to diversify away from oil, and to work on Vision 2030. And a key way you can see that is if you look at the Saudi Arabia's investment, or sorry, IPO, their public offering pipeline for 2026, they have a lot of big Saudi companies that are going to go public in this coming year. And so what they wanted to do is make it easier for more investors, not just Saudi investors, but for foreign investors to come in with their money, with their capital, enter the Saudi stock market, so that when those companies go public, there's a lot of money that's flush and ready to invest in those companies.
Thank you, brother. You just mentioned about some several factors, and I think it's really important to highlight them in detail. So that's why my final question regarding this subcategory would probably be, how might broader geopolitical and macroeconomic trends, for example, global capital flows or oil market dynamics, factor into the timing and implications of this reform?
For sure. Great. So, like I mentioned a little bit, the oil market is very sensitive to geopolitical risks and geopolitical flashpoints. Like we recently saw with what happened in Venezuela, which is the number one reserve of oil in the world. it's a very a black swan event that really most people did, nobody really predicted that would happen. I don't think anybody saw it coming, but it happened. And the immediate impact of that on oil markets, as we discussed last week, is probably not very large, but it shows you how sensitive that market can be to these kinds of fluctuations. So Saudi Arabia, being very shrewd, realizes that as much as it has made money off oil and it has developed through oil, it doesn't want to have all its eggs in one basket. It wants to diversify away from oil so that in geopolitical terms, it's less at risk. So if there's some other big geopolitical event like what happened in Venezuela, Saudi Arabia wants to make sure that its economy isn't at risk. And so it's looking to diversify. Another important thing is when you open to international capital and international capital invests in your market, it encourages and increases interconnectedness, right? So, for example, if a lot of investors in the United States go and invest in Saudi Arabia, now suddenly the United States has an interest in making sure that Saudi Arabia is stable. Because if Saudi Arabia isn't stable, if their economy is going through trouble, then my investments in Saudi Arabia are going to take a hit. So it's also geopolitically relevant for Saudi Arabia to integrate. It makes it so that it's in everybody's best interests that that they take care of Saudi Arabia and keep Saudi Arabia stable as well. So it's hedging its bets in more way than one in geopolitical terms.
So believe that this strategy is going to provide more stability for its economy. Um, yeah, and plus, I believe that it's going to attract more investors than ever for their capital markets.
For sure, for sure. It's definitely going to
Yeah.
attract a lot more capital, inshallah.
Yeah, thank you, brother. Now we've completed the first part of our today's talk and the first subcategory. Now we are going to move into our second subcategory, which is called market mechanics and impact. Let's talk a little bit about how it's going to impact. Is the impact is going to be the way we expected, or it may turn out to something else. So, in order to identify this, I'm going to ask the fifth question from you, brother. So my fifth question is going to be, what are the some short and long-term market impacts we might see once the reforms take effect? For example, it can be regarding liquidity, valuations, or trading volumes, right?
Great question. For sure, for sure. So in the short term, I think you're going to see a lot more interest in the Saudi market, and that will result in some higher valuations. So people get excited about the news. A lot of, especially, investors like you and me and our viewers who probably don't have $500 million in assets, suddenly we can invest, right? So it's going to cause a lot of excitement, and that's going to push up the valuation to some degree. However, a lot of it also is the reason Saudi did this in the first place, and their number one benefit, I think, is there's going to be more liquidity. So there'll be more capital in the Saudi market. There'll be more liquidity. It's better for the Saudi exchange in that regard. So number one change is long term. You're going to see an increasing amount of liquidity and trading volumes in the Saudi market as it matures even further. Um, the extent to which that change occurs is a bit not clear yet, because for on the one hand, so you see, it had that restriction for $500 million and up before, which meant that all the big investors, for example, JP Morgan, your big institutional investors, they're already in Saudi. So a large amount of money was already in Saudi. So this will make a difference in the short term. Long term impact depends a little bit. Because for those institutional investors, right, if you're JP Morgan, you're already in the market. So not much has really changed for you. The big change they're waiting for, I think, in my opinion, is Saudi Arabia still has a restriction on foreign ownership. So if we can invest in the Saudi market now, they're opening on February 1st, so inshallah we can all invest if we choose. However, there's some restrictions. So we can't own more than, as an individual, more than 10% of a Saudi firm. And the total ownership of any firm in Saudi Arabia cannot be 40 at a maximum of 49% of the firm can be owned by foreigners as well. So there's some restrictions on how much you can own. And I think for a lot of the big players, that's sort of the regulation that they want to see change before they invest further or commit further to Saudi. So there will
Mhm.
be some positive changes in valuations, in liquidity, but I think for a lot of the big ticket investors, they're sort of still waiting and pushing for that ownership change.
Mm-hmm. So even though they are introducing this kind of reforms, still this kind of ownership restrictions the mm, can be the barrier to tackle for new investors, right? So we
Exactly.
are considering from this perspective as well. Guys, when you heard that Saudi is opening its capital markets to foreigners, don't rush. Please check. There are some restrictions, but still, it's very good news for the investors like you and investors like me, I believe.
100%. And especially for people like you and me, right? For most, if not all, Saudi markets that are listed on Tadawul, I don't have enough money to own 10% anyways. So, so there's that.
Uh, anyways, it's very good deal, right? A good opportunity.
Exactly. Exactly. Exactly.
For
So,
starting point.
inshallah.
Who knows? Who knows what's going to
Inshallah.
happen in the future?
Mhm.
May Allah give barakah to your investments so that you're able to own more than 10% in the future, inshallah.
I mean, inshallah. Inshallah.
Yeah. Thank you, brother, so much clarifying because you already answered my fifth and sixth question. So it's time for me to ask the seventh question, probably. Mhm. Okay, my seventh question is that how might the inclusion in global indices, for example, MSCI or others like that, interact with this opening to affect capital flows?
Great question. So, for our viewers' sake, I'll explain a little bit. So, you have these companies that set up trading indices or ETFs or that sort of thing. So, they'll set up these baskets of companies, which may include Saudi companies. Sometimes they follow Saudi companies exclusively. The MSCI has, for example, an emerging markets index, which lists companies from emerging market stock exchanges, which include Saudi Arabia and others. So what this move does is it means you're also going to see a lot more of those products. So other than investing directly in Saudi companies by going to Saudi Arabia, you're probably also going to see more US based companies that make products through which you can invest in the Saudi market. So for example, MSCI or S&P will probably have more products where if you invest in this ETF, even based in the US, that ETF has exposure to Saudi Arabia. So the easier it is to access those markets, the easier it becomes to make those products. So you're going to see a lot more representation probably of Saudi Arabia in those kinds of products, inshallah.
Mm-hmm. So this is going to be a change in ETF structure because the Saudi opens its market for foreigners. So surely I also think that US is going to include it within its ETFs because diversification is out there always. And it's
100%.
very crucial for all the investors, I believe, right?
100%.
And thank you
100%.
so much. Yeah.
Of course.
Thank you so much. We've completed the second part of our today's interview. Now let's move on to the third part, our third category, which is about invest access and practicalities. Yeah, we are talking about this news coming out, but what about the practicality of this news coming? So let me ask the next question from you, Brazil. What are the practical steps for a foreign investor, whether it's institutional or individual, to start investing directly in Tadawul?
That's a great question. So the number one thing is you have to look for sort of Saudi intermediaries, so licensed broker dealers and intermediaries who have a license from Saudi Arabia's Capital Markets Authority and invest through them. So look for licensed brokers, licensed trading platforms that allow you to invest in the Saudi stock market is the number one thing.
Mm-hmm. So you suggest working with brokers, right?
Right, with intermediary, anyone who has a license or any platform that has a license that allows you to do that, inshallah.
Mm-hmm, mm-hmm. Thank you so much. So my next question is how might this reform change the product availability like ETFs, mutual funds, or ADRs tied to the Saudi stocks? We've just discussed a little part, but let's
Mhm.
elaborate, make it more precise for our viewers, for our friends.
Sure thing. Yeah. So like we discussed a little bit earlier, so let's say, for example, MSCI, like I mentioned, they have an emerging markets index. And what that does is they look at emerging markets, so not fully developed markets like the US or Japan, but they look at markets like Saudi Arabia, maybe the UAE, Qatar, countries like this, and they'll take the top performing stocks from those countries, for example, and put them up in a little basket for you to buy. So these basket offerings are known as ETFs or indices or indexes, to make it clearer. And so for a company to put those Saudi companies and offerings into the basket, the easier Saudi Arabia makes that, the more you're going to see it. So when there's companies in the US that are making these baskets of stocks, these ETFs or similar products, they want companies from places like Saudi Arabia, but they can only do it if it's easier to do. So as those restrictions have been removed, it's easier for places like MSCI to sell these products to common investors like myself, like most of our viewers probably. And so that, like I said, you're going to see a lot more products that include Saudi Arabia, and you're going to see Saudi Arabian stocks and companies be included more often and have a probably a higher percentage representation within these products. So maybe there's some products where Saudi Arabia represented 5 or 10% of the product offering of that basket or that ETF. Maybe you could see that percentage increase to maybe 20% of those stocks are from Saudi Arabia, for example.
Mm-hmm. As we discussed this new reform, what do you think? Is it easier to invest in the ETF that's done in US or in other country, including Saudi Arabian stocks, or directly invest via brokerage? And I believe it's going to be interested for young Muslim investors, as some of them may be new to investing world. And we do appreciate your answer for this question, please.
Of course, of course. First of all, I need to clarify on behalf of Brother Renat, who could not be here with us, nothing that we say is financial advice and should not
Mm-hmm.
be taken as financial advice. These are my personal
Mm-hmm.
opinions and do not necessarily reflect the opinions of Musaffa. Anyways, that
Mm-hmm.
being said, um, it's a great question. My personal opinion is I think for most investors, it's operationally complex. It's difficult to, for example, let's say you want to invest in the US and in Saudi Arabia and Japan. And, it's hard and difficult to do to find a separate broker dealer or a trading platform that'll individually give you separate access to each of these markets. So the easiest thing for most people to do, especially since most people probably have other jobs, right? You have a day job or you're a student. There's a lot of young people who are interested in these things. You have classes, like, you can't sit and do these things all day. So the easiest and most efficient thing for most people is, I think, to find products that invest in those markets or have exposure to those markets, but are listed in the country that you're in. So for me in New York, I probably prefer if I can invest in ETFs structured in the US, like the MSCI, like any S&P offerings or similar. These are not recommendations, but those sorts of similar products that are available and listed on the New York Stock Exchange,
Mm-hmm.
but are invested or have exposure to Saudi Arabia. That's just the easiest thing for me to do.
Mm-hmm. You just gave examples to make it precise, more
Mhm.
understandable for
Yes.
our viewers, right? Mm-hmm. Okay. Guys, take in mind these are not the recommendations, these are just examples to make it easier to grasp the concept that we are discussing today, right? And thank you, brother. Now we are going to move the fourth part of our today's interview already. It's coming to the end, but it's getting more and more interesting because as a student, I'm also learning a lot about how this reformation is going to change the lives of people. When I just read the title, it wasn't that understandable for me. I just thought, yeah, now it's available for everybody to invest in. But as more we discuss, as more we're learning and more we are growing. Yeah, thank you.
Alhamdulillah.
Now I'm going to
Same.
ask my next question. From a Sharia compliant investing perspective, how does direct access enhance halal screening and portfolio choices?
Great question. So the good news is Saudi Arabia, as everyone knows, I hope this isn't news to everybody. It's a Muslim majority country, alhamdulillah. And Islamic finance markets are developed there. And if you're a company in there, you're going to have more options for Sharia compliant financing as well. So, for example, in the US, it might be harder for a company to get a Sharia compliant loan, for example, compared to a place like Saudi Arabia. So, more and more companies in Saudi Arabia are likely to be Sharia compliant. And not just to be Sharia compliant, but for on Musaffa, I'm sure people have seen on our product. If you haven't, please check it out. We don't just tell you what's halal or haram, we give you grades, right? So is it an A plus, an A, a B, an A minus, a B, and such and so forth. Saudi Arabia, given the structure of its market, given its citizenry being overwhelmingly Muslim, alhamdulillah, um, its companies are also more likely to be Sharia compliant and to have higher grades. So what this means is that for us Muslim investors, for our users and our viewers, you have access to a market where you have a lot more halal options now. And it was hard for you to invest in these options before, but suddenly you have more things, more halal companies on your menu that you can invest in. And like we discussed earlier, it's going to be easier to include Saudi Arabia in ETFs, in these sorts of portfolios. And you can probably see that moving forward as well, inshallah. So when you look for halal products to invest in, a lot more will have most likely have more exposure to Saudi Arabia. So this is just really great news for Muslim investors around the world. Alhamdulillah.
Yes, this is indeed very great news. Thank you, brother. My next question is: are there Sharia aligned sectors or companies within the Saudi market that could benefit particularly from broader foreign participation? What do you think about that?
It's a great question, and 100%. So, Saudi Arabia's market is sort of heavily concentrated in a few sectors, which in some ways is a risk people should be aware of because you want to diversify as well. So it's something to be aware of. But it's very heavily concentrated, sort of in, especially in petrochemical, in oil and gas, in power. But then also it's sort of diversifying now more into financial services, into electronic media, like video games specifically. It's very big on gaming. And the good news is many of those sectors, which are may comprise a large and very profitable part of Saudi Arabia's economy, such as oil and gas and these sorts of infrastructure heavy, more capital intensive infrastructure heavy companies, they're more likely to be halal because they're related to tangible assets. They're working on the real economy, which is really what Islamic finance is more principally interested in. So those are the sectors which are well represented in Saudi Arabia and are more likely to be Sharia compliant, and they will benefit from this move. So, like I said, Saudi Arabia needs more capital for infrastructure to invest in Vision 2030, and that's why they're doing this move. So these are Sharia compliant sectors that need capital, that will need capital, that need that injection of foreign investment, and it's going to be easier for them to get it, inshallah.
So this is a definitely bold movement toward their 2030 vision, I also believe. 100% agree with you, brother. Yeah. Okay, brother. I know I'm speaking more than you while even though I'm moderating this discussion, but I hope it's okay with you as long as
No,
we're
no,
having
you're
fun.
doing a great job. No, no, you're doing a great job. Alhamdulillah.
Thank you
Mashallah.
so much. Thank you. Thank you. Now, we've already completed the four subcategories of our today's talk. And this is the last part of our today's interview, which is the crucial at the same time because we are not only talking about rewards that's coming from this reform, but also the risks that are involved there. So let me call our fifth subtopic risks, challenges, and forward outlook regarding this reformation. And my next question is going to be what risks should investors be mindful of despite the liberalization? For example, governance standards, ownership caps, or regulatory transition issues. What do you think about that?
Great question. So there's a few key things investors should be aware of. A couple of them we've discussed a bit, but it's good to wrap it up and present it again for our viewers as well. One thing is, which we mentioned earlier, is there's still an ownership cap in Saudi Arabia, right? So you can't own more than 10% of the shares of a company, and foreign investors can only own a maximum of 49% of some company in Saudi Arabia. So if there's a company you're interested in, and let's say, for example, foreign non-Saudi investors already own 48.9% of that company, then you really only have access to 0.1% of that company, really, because of that ownership cap. So that's something to be aware of. It's a restriction on investors, and you should be aware of that as investors. Other than that, like I said, the Saudi market is pretty concentrated in a few specific industries. And as an investor, the safest thing to do is to diversify. So you want to diversify so you can reduce your risks. So if you're investing in Saudi Arabia, inshallah, be aware of the fact that they're very concentrated as a market, and you should try to diversify the rest of your portfolio in such a way that accounts for that. Again, this is legally speaking, not financial advice. These are just my own opinion. So that's another thing for investors to be aware of. And lastly, concern we hear from investors and analysts on the market right now is concern about Saudi Arabia's governance standards and transparency or opacity, rather, of its market. So, unlike more developed markets like the US, where you have certain a cadence for disclosures and a level of transparency and insight into markets. Right. So for any public market in the U.S., we have so much information, so much press release, even the 10Ks and the 10Qs, all these filings the companies do. You get a lot of information, a lot of insight into how the board works, what's going through their mind. And so we as investors have a very good idea of like any US company, how do they think? How are they likely to react in this situation, that situation? What's their plan moving forward? And Saudi Arabia is not as mature a market yet. So you don't have the same level of governance standards. You don't have the same level of transparency or insight into their market. So that's something investors should be aware of as well. It's just not as transparent as a more mature market as like the United States just yet. But this move is a step in that direction, I think. I think Saudi Arabia wants more foreign investment. It wants that interest. So I think that's probably an area most likely where you're going to see improvement as well, inshallah.
Inshallah, inshallah. As long as they take the first step, I think journey began already. And the more transparent it gets, I think more friendly it's going to be for investors. And again, these are all our perspectives as the people in this field. This is not that kind of recommendations or some kind of instructions. These are our perspectives for you guys, friends, dear people watching us. So yeah, and brother, thank you so much. And now I'm going to ask my last question. What is your overall view on how this opening fits into the broader narrative of emerging market investment and global capital allocation trends?
Great question. So I would say um, the broad story here is a lot of emerging and developing economies are they're hungry and their markets are growing, their economies are developing, and they're looking to integrate, they're looking to mature their markets. And you see that in Saudi Arabia. You know, this is not just a state that wanted to make money off the oil and relax and sit back and let that happen. It wants to develop, it wants to sort of have that economic convergence that you read about in economic literature. And you see that happening. So on the one side, you see these economies developing and maturing to where they want a seat at the table of global capital, so to speak. And at the same time, you also see global investors who are more interested in these assets, right? There's people, not just individual investors, but institutional investors who want more exposure to, who want to make more investments in emerging markets, frontier markets, these diversified regions and different markets where they might see outsized returns. And so that's really the story of Saudi Arabia. And I expect you're going to see a lot more of that in the global south, generally speaking, moving forward, inshallah.
Inshallah, inshallah. I totally agree with you. Thank you so much, brother, for allocating your time for our today's session. We believe that it's going to be very insightful for everybody who is eager about what's happening in Saudi Arabia. Not only Saudi Arabia, but to some extent, we also discuss what's happening on a broader level. And thank you so much for allocating your knowledge and time for our today's session. We do appreciate.
Thank you so much for having me.
Mm-hmm. So, guys, thank you too for watching, for allocating your time for our today's informative session, for our today's knowledgeable session, and we look forward to see you on our next sessions as well. If you have any interesting ideas to discuss, please inform us, please update us in the comments. We are so eager to hear your voices as well because we believe that there are a lot of intelligent, intellectual people who are curious about what's happening in the world, right?
100%.
Thank you so much, Braza.
Thank you. Assalamu alaikum.